Welcome to the Trading Battle, the internet show where we push two traders to the limit. And today we got a great show for you today. In the blue corner, we have Dave Floyd, the reigning champion of the Trading Battle today from Bend, Oregon. And he's looking very blue today in a nice blue shirt. And the contender, also from the West Coast, Blake Morrow, who is surviving the heat in Arizona. And both of them are battle-hardened market traders ready to go toe-to-toe today against Non-Farm Payrolls, which is going to be the event we're going to be trading with ferocity and tremendous amount of profit, hopefully, for both of them. So without much ado, I'm going to pose our first challenge to our traders. Today, we have Non-Farm Payrolls. Of course, that's the big event of the day. The market is all over the place. Some analysts are calling for 600,000. Some are calling for 1 million. Depending where that number lands, it's going to have a very big impact on a whole bunch of assets and instruments. So my first challenge to both of our traders is the following. I want you to pick the currency, the best currency pair that you think is going to perform well in front of the event. I want you to pick the best index instrument in front of the event. And for those that you want to get a little bit more nuanced, the best currency cross, perhaps, that could kind of shelter you away from market risk. So let's start with Blake, since he is Mr. FX. And let's see what he's got up his sleeve today as far as his ideas ahead of Non-Farm Payrolls and also his views on Non-Farm Payrolls as we get ready for the event.
Well, Boris, thanks for having me back. And Dave, ready to go at it? Good to be in the ring with you.
All right. So what do you think? What do you think looks good right now as we're approaching the big event?
Well, there's a few things. I guess I want to start out by saying that the equity markets. You're looking at the Nasdaq, and it continues to rally here. And I'll pull up the chart if you guys aren't looking at it. We're above like some pretty big confluence of fib levels and over the 127% extension. I think.
Blake, could you do us a favor? Could you share your screen? Because we'd love to see what you're looking at.
I'm going to do that right now.
Yeah. Click that share screen button, and we'll look at the charts along with you. All right, awesome.
Okay, there we go.
We got it.
So, if you see the Nasdaq, we're ripping up to highs, and on a weak data print, if we let's say we only create 400,000 or 500,000 jobs, let's just talk headline number. The Nasdaq should continue to rally. However, I'm actually gonna bet on the U.S. jobs report. I'm gonna bet the fact that we've had two kind of underperforming jobs reports, and I think the whisper numbers are correct. I think the whisper numbers coming in around 800,000. I think, and some of them are maybe even north of that.
Right.
I think they're right.
One whisper number that's the million. Yeah.
Yeah, and the fact of the matter is, if we create 1 million jobs, the stock market's really going to take notice. I think people are going to start thinking Jackson Hole, Powell's going to be a little bit more hawkish. We're going to talk about tapering, and maybe that moves that goalpost a little bit closer to us actually tapering, and maybe even at a faster rate than the market is expecting. So I would, if you have to hold a gun to my head and say, hey, ahead of the job report, I know you are, and I'm not that type of trader, but I would be selling Nasdaq here.
Okay. And so it's really interesting. Your basic thought pattern here is great news is bad news for equities, because 100%. that means the Fed, and especially, this is really interesting, not necessarily just for all equities, but Nasdaq in particular, because the Fed is going to be much more likely to taper sooner rather than later.
And I think it's going to hit growth, these growth stocks a little bit more aggressively.
And to make some of our viewers understand a little bit better what the macro thinking behind that is the following. Nasdaq stocks are all trading at very, very high multiples, much higher multiples than almost any historical measure. The reason for that is because money is absolutely free. There's almost no interest rate attached. And as long as money stays free, that creates that whole vertical move up on the Nasdaq. But if money starts to become even a tiny bit expensive, if the Fed just hints, makes a hint that they're going to start raising rates sometime down the road. That puts a tremendous amount of headwind for NASDAQ, which is why Blake is basically betting that great news for the economy is going to be bad news for the NASDAQ stock market. Very interesting.
Yeah, and you got to imagine too, Boris, that in the event that we have a weak data point, this is going to break out. And if I was to trade pre NFP, my stops would be above this trend line, which is about 14,000. Let's call it 14,650. You know, somewhere above here, I'd be nervous about being short.
Okay, so to reaffirm, we're gonna go into the market short around 14,618, somewhere around there, 618, 617. Stop is 14,660, 665.
I think 660 would probably be good. Okay. You know, try to avoid some little whiplash there. Yeah.
Sure. Okay. So we got that first trade in, and then obviously we'll manage the take profit dynamically as the event develops, right? So we got one trade from Blake. Let's go to Dave and bring him into the conversation. See what he's got up his sleeve right now as far as his idea. Index, currency cross. Give it to me, my friend. Oh, Dave is on mute. We need Dave. Hi, Dave. Unmute yourself.
I'd concur with Blake. I think if we do get a strong number, I think the market's going to take its cues from the bond market, as it always does. That's kind of where the smart money resides. And if rates begin to move higher, which is a distinct possibility, especially if the job report is good, I think that will have a negative impact on indices. I know we're not trading notes in here, but I think we need to reference them because 10-year notes are going to be pivotal. I think if we can get below 132.08 and certainly below 131.26 on 10-year notes, that will probably set a negative tone for equities. Now, maybe that equity weakness is short-lived. You know, maybe it peters out by the end of, by the early part of next week. But we've had quite a run here. I don't think it's a uber bearish sign if we see some weakness in the S&Ps. There's still a lot of money sloshing around out there. But, you know, a little bit of a pullback would be healthy. And I would agree with Blake that, you know, it's probably tradable. I'll probably look at the S&Ps, you know, something below 42.80. Ideally, I'd love to see a break of 42.22. That would really open things up. But that's a ways away. And, you know, these dips are usually bought up furiously. So hard to expect them to get down there.
Okay. So if you're sort of negative bias position in front of index, I'm just going to put you short S&P right now, which is where's my levels?
42.14 right now.
43.14
or 43.14. Yeah.
We'll get you there. What do you think would be a reasonable stop on that position? You know, if you're on the wrong side, where do you think, you know, if we do get a spike higher, where do you think it would exhaust itself on a fake stop or a reasonable stop?
You got to give it a little room. I mean, obviously the recent high, which is right around 43.18, so that could be hit easily. You know, I would just say 43.25, anything above
43.25. Yeah, for sure. At least 10 points because you're going to get knee-jerk reactions in the S&P. Okay, so we got the two index trades here. Stay with me, Dave. Let's do a currency trade. What do you think on the currency side? Looks like the strongest possibility here because here the story is very different. You know, good numbers are actually going to be positive for the dollar. So what do you think is the trade here?
Well, we've had the dollar really strong for the last, you know, several days. Aussie's been lower, Euro's been lower. I would maybe say, you know, if we get the euro down around 117.20, maybe I'd be a buyer down there. Just a little bit more of a mean reversion. Again, not saying that the move higher in the dollar has exhausted itself, but it might be due for a pause. That would be where I'd stick a limit order in there at 117.25.
On the euro. That's 100 pips away. What would you do right in front of the event? So you want to be buying euro like 100 pips down?
Yeah, I mean, I think let me back up there. I mean, I think the euro still looks set to move lower, and it probably might do that on NFP. You know, it's certainly weak. Downside target down around 117.25. You know, if it spiked down there on NFP, I'd be a buyer down there.
You'd be a buyer down there. But in the meantime, in front of it, you know, so overnight high I think looks around 1847. right?
Mm-hmm.
But in front of it, you think that it's positive news. You think generally you're bullish this non-farm payrolls, which means it's going to be negative euro. So you'd want to go, you want to front run the euro here just for a pop down. That's your higher.
Yeah, if it's not a trade I would normally do, but given what we're trying to do here, yeah, I mean, let's be short the euro going in
exactly.
But be quick to cover at an opportune level and flip it and go long.
You got it. Okay. Well, we'll let you cover. We'll let you play the cover side. Coming in here at around 1825, 1824. Stops above the day's high, 1850, somewhere around there. Is that reasonable?
Yeah, I mean, might get wiggled out, but that's okay. I mean, if you get
you can go higher. You can give yourself like 60, whatever you want to give yourself some room. Okay.
Yeah, I think above 1860.
1860. All right. So we're in around 1824, and we're going to put a stop 1860. We're going to again manage it dynamically post event, see how this whole thing plays out. Now on to you, Blake, my friend. What's your currency trade in front of the event?
Well, it depends. What are you going to force me into the market again, Boris?
Yeah, of course. I force everybody to the market. There is no choice when it comes to the trading battle.
I know there isn't. Okay, so I'm gonna actually play. Now this is going to be in tandem with being short the Nasdaq. Remember, I think this is going to be a strong number. So I'm going to stick my neck out a little bit. I want to be long the dollar MEX. And this is following, the dollar MEX, because this is going to be a currency pair that broke 1990, and this is we cracked that 1990 resistance.
Right. Could you share your screen so that they can see dollar MEX if you have it on?
Okay, there we go.
Thank you.
So the dollar MEX, we following the Banxico's meeting last week. Right. The dollar MEX slipped, and obviously the market knew exactly what was happening ahead of that. I mean, this is the dollar MEX move. This is right after the meeting, and we slipped and we traded lower. Right now, based on them raising rates, the Mexican peso didn't rally any further. So there were people that were stuck short or long MEX. They got squeezed out this week. Now we're perched above 1990. And look, if this is a strong piece of data, it's gonna spark further short covering or selling of emerging market currencies. And I think the dollar MEX spikes, well above 2010 and probably back up to 2030, 2040. So if you're gonna force me into the market and you're gonna put a gun to my head, I'm gonna get long dollar MEX right here. Stops below 1988. So stops right below here.
All right.
And then I'm going to target 2030.
Okay. So for our audience information, every trade has a default of one lot position. And I'm going to ask the traders as we go on to see how convicted they are, how convinced they are. That's a joke on a lot of people's names who mix up that word. In terms of their, strength of their trade. So, are you a one lot trader on this, or you want to go larger? You want to go large and go home there, my friend, or
pre-market, pre-jobs report? I'm on one lot. I mean,
Blake is properly gauging his risk. All right, we got super quick before the event. Any currency crosses? I'm not going to make you do it if you don't have anything that you're strong on. But if you have something strong on, give it to me. Both of you guys just shout it out, and then we'll start put our eyes onto the NFPs and see how the number comes out, and then watch the event.
I'm still thinking of Euro Sterling.
Euro Sterling. Long short, Dave.
I'm bullish on that. It's done nothing, but I think it's poised.
Okay,
NFP
so Dave long Euro Sterling, and then Blake.
Long Aussie New Zealand, and that's a good number.
Good number. Okay, let's see what a number is here, guys, because I'm a little bit behind.
Unemployment rate's actually ticked higher to 5.9%. That's going to be a little bit of a risk. So the headline number came in at 850.
850. That's a pretty good number.
The headline number is good. Unemployment rate is not so good, but the dollar is responsive right now, and you're seeing the dollar Mexican peso push higher. It's at highs of the session, so.
Both trades are working really well. The short euro, Davis killing it with because he's in 24 and now it's 1810. If you want to cover quickly, up to you. If you want to milk it, be my guest. Here's here's a summary of how everything is looking here. Blake hit the short on the P&L. His P&L on dollar MEX is rising. His P&L on NASDAQ is rising. Aussie Kiwi, relatively flat. Euro dollar P&L is working for Dave. Euro pound is flat, and then SPX relatively flat. So Blake made the two big trades, high volatility trades, and those are really paying off for him, and he's really rocking along. So up to you now, guys, as to what you want to do. You want to bank it, you want to milk it, you want to do what you like. I'm happy to
for right now, I'm just going to sit. I'm actually kind of surprised there hasn't really been a massive reaction in the S&Ps or in notes here. It's been pretty muted.
Yeah.
So I'm going to stick with what I've got for the time being.
Yeah, okay. And you know what? I'm going to do the same as Dave. And the thing is equities kind of bid up, I think, on that weaker unemployment rate number, and the average hourly earnings looks like they came off a little bit. So I think the stock market actually likes that, but I think we have to watch the price action from here.
Interesting. Okay, yeah, equities are they're bouncing back. Your P&L is shrinking right in front of you guys. You snooze, you lose. I would have closed everything out by now and just banked it and did the whole picture. But you guys are much more patient.
Comes the euro back.
Yeah, I got to close out those.
Okay.
And you know what? I need to be. I don't know. It's hard. This is one of those where you could end up getting wiggled out and
totally wiggled out. Yeah.
Yeah.
It's always a coin toss. You never know how the market reacts. You can even say, well, that was a better number. We should move higher. It's
so we're out of. Let's just get an update of everybody. Dave is out of S&P. Whereas Blake is out of NASDAQ, Dolomex, and NDX. What are we doing?
Yeah. Well, you know what? Am I still out of the Mexican peso?
No, I see. You're closed. You closed NDX, but you're still in the Mexican peso. You're still in the Mexican peso. You can add
for a minute.
All right. Okay. So it was definitely a big whipsaw turn. Really big turn in euro. Euro went from 1806 to 1840. Big reversal. So
rates are coming off here too. So that we're back at 144 on the 10-year. 132.21. So notes are strong. For whatever reason, they see it as it must be that uptick in the unemployment rate or something, but they see something that they like.
Got it. All right. Well, we got a big flip reversal, and now you got to manage for risk. Let's move to our second challenge of the day. We're going to take our focus a little bit off the NFPs, let the market settle in, and we'll absorb that. And let's talk commodities. Now, commodities are also a really interesting story today because we have OPEC Plus meeting. There was an meeting yesterday, but they kind of pushed everything back to today. There's lots of uncertainty in the marketplace as to exactly what they want to do. The general convention or consensus was that OPEC Plus was going to expand its capacity by about 400,000 barrels. But then yesterday, Abu Dhabi came in and said, no, they want a special deal. They kind of scuttled that deal. And the market is really on pins and needles. Oil is hit 75 highs. It hasn't seen that in years, and continues to be relatively well bid. So the question is, where are we on the commodity front? What do you like today? Oil, gold, and I'm going to include crypto as part of our commodity basket. You get to choose, make some calls here of what you want to trade. And Dave, if you can share your screen, maybe since you're the oil expert here today, you do a lot of commodity trading. Love to see your screen and see what you think about the setup as it goes.
My trade that I'm actually currently in, I'm short oil. I'm short it via some options on USO, but you could do the same exact trade on the CFD for oil. It's really more based on kind of quantitative data as opposed to the technicals. I think the technicals are pretty clear. Oil's been on a straight move higher, but bear with me here. A couple of bullet points here that I think are really important that we want to take in. For the first time in a long time, we've got backwardization in the futures market, where what that basically means is that the front month futures contract is trading at a massive premium to the to the contracts 12 months out. In fact, the average spread is usually about 9 cents. We're currently at $4.50, and that is unprecedented.
So what does that mean, like for those traders who don't quite understand backwardization, what is the market telling you by pricing the front month so much more expensive than the back month?
For whatever reason, they just feel as though they've got to be buying oil now, and it just creates kind of a really lopsided bid in the market. Usually, most people think oil will be worth more 12 months out from now.
Right. Usually that means the market thinks that the supply constraints are present but will be relieved in the future. That's why they're not pricing the future as expensively as the present, because they see supply constraints now. Okay.
Yeah. So again, just using historical data, when you've had that type of backwardization to this extent, you usually get a mean reversion in oil. Adding to that, we've had the price, of course, of oil has just gone straight up. We were 2 standard deviations above the 50-day average. We got a pullback. Last week.
Do me a favor, Dave. Can you have oil on your chart? I'd love to see you. Can you share the chart with us, please?
I only have the USO chart, but I can pull it up.
Okay, it's fine. I mean, it's a good enough substitute. We can take a look at it. We'd love to see your chart. Just click. You got to click on the restream. There's a button on the bottom right next to the video. Right next to the video thing, it says share chart. There you go. Share screen. You got it. You got it. Beautiful.
So again, being pretty basic chart. I'm not going to do a deep dive on technicals here because there's not much to do. It's straight up.
Right.
But we did have this pullback last week, and that was a couple weeks ago. That was to some degree, a little bit of a reset from this massive move up. So bottom line is, when you've had these types of events where you're 2 standard deviations above the 50-day, you've got the backwardization. On average, you can see oil prices down about 13%, anywhere from 1 to 3 months out. There's been 5 instances of that over the last 10 years. 4 of those instances ended up with prices lower in oil. Only 1 where oil was higher. So I'm just basing it on historical data where we had similar situations. So I'm bearish on oil as a trade, 1 month out, 1.5 to 3 months out, somewhere in there.
So we're gonna mark you
next week.
Sounds good. For trading battle purposes, we're gonna mark you short oil at 74.42 now. And we'll see how that trade works out. You obviously have a longer term trade, so maybe we will hold that trade all the way through trading battle and maybe into the next week, and we can update the position. But generally, your view is that it's got to come in a little bit, and we're gonna mark you short here on the thing.
And I think even if somebody doesn't have that long of a time horizon, I think oil's at a level where there's even some short-term opportunities.
I agree.
You might have your stops too tight because it's kind of always hard to get in front of a moving market or a market that's moving that much higher. But that's where I feel prices are going.
Okay, sounds good. Blake, what about you on the commodity front? What do you like? Gold, oil, crypto? You got the whole carousel in front of you. Tell me.
Yeah, first of all, as far as crude oil goes, I'm with Dave in his argument. And the way I'm expressing that is actually I've been long dollar Canadian.
Interesting.
I've been long dollar Canadian for it's been a hell of a rally off of the lows. But we're in a bull flag pattern. I actually didn't want to step on Dave while he was talking, so I actually just personally I bought a little bit of dollar Canadian down below the 90s here, so back into the 80s because of this intraday trend line. But I think the dollar Canadian is going to be a great way for currency traders to express longs or oil short if you don't want to be short oil outright.
Great proxy.
Yeah, you can trade that as a proxy.
We're gonna mark you long dollar CAD here in the 90s, and I'll let my producer know that that's the position, and we're gonna hold that. We'll see how that position shapes up as the trading battle develops. But that's an interesting play. It's actually an interesting trade both on developments in oil and developments in non-farm payrolls because we're getting a little bit of a bounce back here. Remember, we got a big shakeout on the initial move and a jig, and then actually you're looking at NASDAQ right now, Blake, and your NAS trade would have been working. So
I know this was a perfect day to when you didn't have data that all lined up, and that's when I trade non-farm payroll. Typically, what I'm looking for, because there's a lot of times that I just sit and wait for price action. Today would be a perfect example of that. But remember, for trading battle purposes, we're kind of our hands are forced into trades just to, for obvious reasons.
I'm going to give you guys a second chance. You look, we've had about a good 10, 15 minutes off the event. Revisiting your ideas prior to the event. Would you like to go back in? Do you want to get short NAS now? Do you, let's do a secondary analysis of this and see if there's any more trades that you guys want to do as we're looking at the market right now. Because
can I finish my thought really quick here? The thing that I typically will look for is all the data to match up what my expectations were. And for me, I wanted to see, we got a strong headline number, but I would love to see average hourly earnings go up. I wanted the inflation picture to be a little bit more robust. I wanted unemployment to at least match expectations. If we would have came in at 5.7%, and and with a stronger number, I'd be selling risk right now. But since
it's mixed, right?
Yeah, the expectations are kind of met in some places and not others. You're always gonna get the glass is half full view from the market, and stocks are liking it right now. The S&P is up.
Stocks are liking it. Does anybody want to change direction and get long stocks here? Dave, you want to get long S&P? No. It's really hard. Everybody's like, oh, it's so hard. I don't want to buy the top. I don't want to buy the top. I don't want to buy the top. But it's generally those are the hardest trades to make.
Those are the hardest trades.
Yeah, exactly.
I think one of the challenges you have today is we're coming up on a long holiday weekend here in the States. So I would say within the next hour and a half, everybody's going to be heading for the beaches. So we'll probably risk a little bit higher for sure. But I'm not gonna try to re-short the euro here. I think the market's spoken as of now. I mean, granted, that could change, but we've been lower in the euro all week. Now we're drifting higher. I think that just probably will feed on itself a little bit to the upside. And given with no conviction in notes, it's kind of hard to reestablish.
You want to share your screen and just show us what you're looking for on notes and everything else, because we'd love to see a little bit of color on that. Just share on the on that.
And Dave, I just want to reiterate what you're saying. I think watching like the 10-year and seeing what the 10-year is doing and notes are doing in general it's really important in today's market. And my partner over at Forex Analytics will tell you, look, the market's only going to move when yields move. So it's great that you're pointing it all out.
Yeah. Well, I mean, looking at the hourly chart right here of notes, I mean, that is one ugly candle. I mean, good gravy. That took a lot of people out up at 132.23 and a lot of people out at 132.8. Now we're smack dab in the middle of the range. So
to understand,
what do you want to do here?
Dave, could you go to like a more like maybe a 5-minute chart? Because I'm trying to understand how did the notes trade? Did it went down first, up, down first, and then up?
Yeah, they went down first. Notes moved lower first, and they rallied back. And now they're just kind of farting around right where they were right before NFP.
Interesting. Okay. So just to reiterate, for challenge 2 on the commodity side, Dave is short oil. Blake is long dollar CAD. We're going to monitor those positions for everybody. Maybe take a look at the scoreboard and see how those positions are trading right now. And then we're going to move on to our challenge 3 as the day opens up. So here's dollar CAD. Just a tiny bit of negative P&L. Aussie Kiwi negative P&L, and where are we at? Dave, you still have your euro as open. I don't know if you want to close it out or you want to just now hold on to it and.
Let me take a look at the chart real quick. I mean, let's just keep it open. I mean, again, I'm trying to guess where it's going to go right here with this price action as a coin toss. So let's keep it open.
Okay. All right. Dave is letting that trade float. Oh, we need to get Dave into crude. We need a short crude position. Oh, USO, we do have it. I'm sorry. I'm just he's in that position. Okay. Very good. So now that's the update for challenge 2 today. Very, very challenging day, frankly. Lots of whipsaw action for traders. Everybody's just trying to kind of survive the risk. Let's find out what's going on ahead of this big holiday weekend. Dave said exactly that we are going to have kind of a big holiday weekend. Very likely trading is going to come to a grinding halt, maybe by around noon New York, which is the end of European trade as well. But still, there are going to be, market open. There's going to be some jockeying. There's still going to be a little bit of positioning. Looking at the market right now, knowing what you know about the data from the non-farm payrolls, where do you think the best trade for the rest of the day lies? I'm going to ask Dave first and see what he's going to be able to come up with as far as on his instrument set. What's on your board looks most attractive from a technical and a fundamental point of view?
Given what Blake was doing as kind of a proxy for an oil trade, and if we want to keep it FX centric here, we could do the same exact type of a trade setup. We could go long dollar NOK, which of course is a kind of a proxy on oil, very similar to dollar CAD. So, using this pullback in the dollar as a way to kind of pick it up on the cheap, I think dollar NOK probably makes a little bit of sense down here.
Okay. So
it's so funny, Dave. I actually have the chart up on my screen. That's I was just looking at that, and yeah. So he stole my thunder. That's cool. I like it. Hey, look, I agree with Dave. So go ahead, Dave.
Yeah. So go long here. We're 863.30 right now. Go long. Okay. I think that'll be a good trade into the weekend and into next week because I still think the dollar's got more legs to the upside and oil to the downside. So
Dollar. Would you like to just for our producers information, where would you put a stop there? Since this is relatively, you're going to be willing to hold this for a while. You want to give yourself a little breathing room?
How would you? Again, this might be a trade, obviously, for the trading challenge, and we're just trying to guess by the end of the day. But I've got pretty high conviction on lower oil and stronger dollar. So I'd have to see something around.
Let's see how high conviction you really have. You're going to go just one lot, or are you going to really step up and become a man?
I would probably put on 5 lots here. Put a stop at 854.
Okay. All right. So here we go. So Dave is not only going dollar NOK long, but he's getting large. He's going to go 5 lots, and he's put a stop at 54, and so that will be his final idea for the day in a trading battle. And now we're going to turn our attention to Blake to see what he can pull out of his hat as his final great trade idea.
Well, Dave, I'm going to say that you kind of stole my trade because the reason why I love the NOK is and I agree with everything you're saying, by the way. The reason why I love it is it's challenging this 200-day moving average. We came out of a descending wedge.
Can you do us a favor and just share it? Because we'd love to see what you're seeing on the screen.
I'm still sharing the screen here. So we came out of a descending wedge. Which is bullish. We challenged the 200-day moving average just a couple of weeks ago. We're back at it the last 2 nights, today and last night. We're challenging it. I think a break above 870 is hugely bullish for the U.S. dollar, Norwegian krona. So I love it. So with that being said, I'm just going to have to add to my dollar Canadian, and I'm going to have to put on a couple more lots of dollar CAD.
There we go. You're really liking that trade. That's great.
Blake, there's no reason why you couldn't do the dollar NOK trade, and whoever wins is the one who position sizes properly.
Well, I'm going long 20 lots. I'm just kidding.
There you go. So you win by default if the forecast is correct.
Too aggressive for my taste, but you know what? I actually think the dollar Canadian. I think that's also a great trade. As long as we stay above 123, I would say 123.35. So we continue to make higher highs, and we don't breach this little previous breakout point. I think adding a couple lots here is a reasonable trade.
Okay, so what size? What's your final size on dollar CAD?
I'd like to be long $3 CAD, and I'm targeting 127, which is a bull flag pennant breakout. It's a full on,
So that's going to be Blake is going to stay in this until he wins or dies. That's if he does indeed. Come anywhere near his target, that's going to be a massive, massive long-term win for him.
What's going to happen? If we end up getting dollar CAD up to that level, he's going to be moving from Phoenix to Vancouver, Canada, and just killing the real estate market up there with all those money's he'll have in his pockets.
Correct. So he's targeting 127 in dollar CAD, approximately 127, right? Somewhere around there into that.
Yeah, I meant to say 126.85. So
126.85.
126.85. You want to come in just shy of long-term targets, but. Hey, you know what, Dave? I might move up to Bend, and we could go in on some Canadian real estate together. What do you think?
Maybe if it pulls back.
Yeah, right.
you could just buy the apartment for my 2 kids who are living there, so that would be fine.
Oh, there you go.
There you go.
It's been unusually
so just
hot.
understand, looking at Blake's chart, kind of interesting on the dollar CAD base. Can you go back to the dollar CAD base just for 1 second?
Yep.
That was a very interesting market. So basically, the reason why he's projecting that massive move is because that's a fib level. That's a fib extension level. Is that what you're doing there?
It's a little bit beyond the fib level, but it's actually an extension of an AB equals CD or a bull flag pattern. And we held the 50% retracement, which meets my requirement for being long. If it dipped down to a 618 retracement, it's not my. It would be outside of my parameters. But I think we break higher. And remember, everybody's caught short around 120. Everybody thought this is going to be a big double top. Blah blah blah. Yeah. Dollar's going to be bearish for all of 2021. Now, every bank, we talked about this last week, Boris, and I think the dollar is going to rip, over the next couple of weeks.
I think that's a really, really good point. That everybody is look at dollar CAD working it, baby. It's really working it for you. Good job. 2407.
So is milk. I think they're both moving.
Let's take a look at the scoreboard. Let's see how it's shaping up. So the P&L is starting to look a lot prettier now that we got rid of all those losing positions. So dollar CAD is working for Blake. Now the P&L is starting to really wrap up because he's got bigger size on the position. And obviously, the cross ideas are kind of flat. Dollar Noki is working for Dave. You guys have both called the oil trade spot on in the currency market, and that's really, really working well. Yes, the euro pound is kind of flat, not much going on over there, and the oil is just mildly negative. So, look, Dave's patience is paying off. The euro dollar short is kind of coming in, so he's getting close to even. Dave is in the lead for now. Dave is in the lead. He may be this 2-time champ here for right now, but remember,
don't be too ahead of things here.
By the way, there's a couple of headlines that just came out. UAE is prepared to accept unchanged oil output for August, and that comes from a delegate. So oil is actually spiking higher on that.
Yes, oil is spiking higher. That's going to impinge. Let's see if Dave is going to stay with that trade or going to close it out on that headline. What do you think?
No, I'm sticking with the oil trade.
You're going to stick with the oil trade. You guys are all going to stick with the oil trade. All right. Yep. So everything. It's funny. This is the beautiful part about trading. As soon as your fortunes go up, they can also go down. Dave was in the lead, but now the oil headline with Abu Dhabi totally flipped him around. But remember, he's staying in these positions. These are all going to be longer-term positions. The traders are committed to them, and we're gonna update you guys on those positions a week from now to see exactly where they stand. Because where you are now may be very different where you will be a week from now. Regardless, it's been a really, really fun trading battle. We've had a lot of CISO action, a lot of different news flow today, both from the non-farm payrolls, which kind of, I think, initially faked everybody out, to now the oil headlines, which are creeping out. So for a sleepy July 4th holiday weekend, this has been some kind of activity as far as the trading battle goes. Any final thoughts on your head, guys? Like we're looking around now. It's too close to call, so we're not going to be able to call the trading battle right now. We're definitely going to be following it a little bit later. But I'm just wondering, your thoughts on the markets, your thoughts for the next week. I'd love to hear from you. Let me know Blake first, and then we'll go to Dave. Go ahead.
My thoughts are, when you again, I have to reiterate, when data comes in a little mixed, for me, typically, especially if I'm trading myself and it's me in my own comfort zone, I tend to be a little bit more conservative and, not trade around the news because for me, cash is a position. And in this type of situation, when we have that dynamic where some data is good, some pieces of the data are not, the market's always going to err. At least in this market, the market's going to err on the side of more optimistic for monetary policy. That's why I think stocks continue to rally and keeping the dollar pressured right now. Obviously, as we go into the weekend, it's going to be interesting to see how the market opens and how we close out the week because it is a 3-day weekend. It's a long weekend, and I'll be interested to see if there's some position squaring going into this weekend.
Interesting. So you're basically, what you're going to be watching is whether we're able to hold the highs, whether the market closed out on the highs, or whether we get a little bit of profit taking as everybody tries to square up in front of the weekend. That's going to be your big look as you're going ahead. Okay, what about you, Dave? What are you thinking going into the last session of the week?
Well, yeah, I mean, I think by and large, what we've seen is probably what we're going to get for the day. We may squiggle up, may squiggle a little bit down, but I'm not expecting a whole lot. I think that pretty much it's the status quo going forward. I mean, trying to be cute and call tops and bottoms in this market is a really challenging thing. There's nothing that's happened today that seems to really, shake things up too much in terms of the S&Ps specifically, and really nothing in terms of the dollar. So I think it'll probably be, continue on as is. Yeah, I mean, I think there's obviously an opportunity for the S&Ps to weaken up a little bit, but that's more of an opportunity to reestablish longs or add to current positions. I mean, I think trying to call tops in here is really a fool's game.
All right, great. Well, we're going to follow all your trades avidly as they develop into the day and then into the week. I hope you guys really, really enjoyed this. This has been a kind of a wild and crazy trading battle number 7. We don't have any clear winner. That's the first time we've had that. That's kind of interesting, and that's just, I think, a reflection of both the markets and the state of play right now. So we're going to follow both of these traders very avidly for the next week and really see how their longer-term positions are working out. I hope you guys really, really enjoyed this. This is Boris Schlossberg for the Trading Battle. We'll see you guys in the markets after the holiday. Over and out. Everybody enjoy the long holiday in the U.S. and everywhere else where you may be.
Thanks, everybody.
Thank you.
Hey, good.